Welcome to TradeTheMBI.com. This is John. This report is for the 5th of August, and we have a continuation of what we've been seeing. MBI White leading, coming off of that key algo break right there at the 55. It was sort of breakdown, hit the 50, came back up to it, but then world events started to take place. You've got the chaos now that's developed in Japan, which has caused mass liquidations and is spreading rapidly. And this is the reality. You have Israel about to be on the brink of a major war. You had the U.S. capitulating to Russia, actually, in the prisoner swap and releasing some of the sanctions. And so it's all coming to a head now. And, well, we're already off on the ES 130 some, or as low as 150 some. And it's all pretty congruent with what we've been seeing from the readings. Once we were below that 55, 59, it was definitely, be short, stay short. Nothing changed from that, all the way back up from way up here, the 56 range. We've been red in our daily, and it has its impact. How strong this will go? Well, now that's a different issue. There's a long way that things can retrace before you reach what you might call some level of sanity. Even looking at the NQ back here, if we go all the way back to December, we got positive extremes down at the 1687 range. That's significant, at least for some who weren't expecting this. The treasuries, everyone just flinged bonds, so yield super negative relative. The idea being that the Fed is now forced to intervene at some point here and start cutting rates just to stave off a complete collapse. So you can expect a huge liquidity pump from that standpoint. Oil suffering, and the real question on this one was, and it wasn't really much of a question, is the slowdown and how much of an impact that was going to have on supply issues. Will this be deflationary? Not yet. It's going to take some time. Certainly a help, and that's definitely boosted the euro, and that simply because cheaper oil. But you can see that's just a flee from the dollar. I don't think that it's any better to be in the euro from that standpoint. That's like saying, oh yeah, jump into the yen or something. No, but of course it's a great opportunity for them as cheaper to one buy commodities in dollars as this fades back, and certainly helps ease the carry trade situation that you have between Europe and the U.S., but uh, it's not going to be any better for European countries at all. From a gold standpoint, not suffering to the same degree, and of course, this shows where the resilience is going to be, and you can see a significant pop from gold simply because where are you going to put your money? Well, everyone was saying Bitcoin, but with the Japanese situation, you can see the liquidation started really early. Also, not a huge surprise. I had marked positive extreme all the way back here from February and had it on the chart. And what was the low so far for Bitcoin? Oh, yeah, right at it. Surprise? No. But for a lot of people, it's going to be stunning shock. But, when they're faced with massive chaos in Japan and that, and you have a lot of Asian countries that are going to have to liquidate positions to cover losses in that. And, the beginning of this, weaker area when it comes to futures and that, of course, it was a gap situation, but even live trading of Bitcoin, there was just a massive supply of needing to get out. Was some of that the U.S. and Biden dumping the Bitcoin that Trump told them to hold on to? Who knows? You can play those games forever, but uh, ETH as well. Uh, and it's filling back in right over here, positive extreme. And there was the low right there. It's actually blown past that, and then you get into some extremes that go way back in time, and you get much closer to filling all those. Uh, for me, it's not much of a panic situation because while everybody else may be thinking that everyone's kind of put all that new fund money to work. Great opportunity if they want to buy the dip. Certainly going to be a strong one, but there's also the situation of how much of an economic decay has taken place, at least in the credit markets. We've been seeing this build for some time, and it's been staved off, but. Not hard to see this from a short standpoint. It's been trailing that from a 50K standpoint. Yesterday, we had strong MBI white spike, which suggested a move back towards the zero line at this particular stage, and then you had a secondary spike also at the 23. So you knew that the zero was going to break even before the open. So it was just a question of how quickly would it be? And in this particular case, it happened very quickly at the open of futures and plummet. And this is my whole point that I've been talking about for quite some time here. The volatility is not something to be afraid of. It's something to take advantage of when you have the ability to see where it's coming and how it's coming. This is what the pre-market looks like. So you had the big gap down and European session. Not a whole lot of joy in there. If we go back to Friday's action, was also mostly down. I mean, there really wasn't a whole lot. That started early on the pre-market and then tried to hold on a little bit, but then at the end of the day started to fade off just at the close, and that was the early signal that things were starting to fade off. So, yeah, dramatic, but nothing that really we could see. So, all pretty straightforward from that standpoint. There's going to be a lot of turmoil. It's going to mean pretty significant pops in that coming back through as by the dip crowd jumps in. New fund money has arrived. Will they be static and paralyzed because of the geopolitical situation is the real question, because normally they would just step in to do this, and will this start to trigger circuit breakers at some point? Doesn't really matter. We're just going to continue to follow those readings. I don't think that anything's likely to change from the daily, even on a turnaround. You're still seeing a little bit of fade of the MBI white, but there's no turnaround yet from magenta or yellow. But any pullback in there will be just a matter of trying to find a support. And the reality is right down here, you had the last extreme that was in the yellow range and then goes just further. These had all been filled back in, but then you get the dip below the red line, which the last one going all the way down to 5K, and there's still plenty of room below that that we can go back and explore from earlier in the year. You would go down into the 49.30 range. I can mark that one just so that we have it, because these happen, and it's just a question of following what the readings are and waiting for it. All in all, I think it's been pretty effective from a reading standpoint, so very happy with the algos identifying this super clean. Anything relevant, though, I will certainly put on the Skype chat, but there's going to be a lot of noise, a lot of news. Just ignore that and stick with what you see from a reading standpoint. As always, though, trade well. Have a good one.